Welcome back to the Econ Lab, the place where we dissect economies like mad scientists. Today, we're diving into one of the most revolutionary forces in human history, capitalism. From dusty trade routes to trillion-dollar tech empires, this isn't just a story of money, it's the story of innovation, freedom, ambition, and yes, some epic failures and comebacks. Buckle up, Econ Explorers. This is the history of capitalism, a roller coaster that shaped our world. If you're new here, hit that subscribe button and let's make some intellectual profits. Let's rewind thousands of years. Humans have always traded. In ancient Mesopotamia, around 3000 BCE, people swapped grain for tools. Phoenician merchants sailed the Mediterranean, spreading goods and ideas. But this wasn't capitalism yet. These were mostly subsistence economies, command systems run by kings and priests. True capitalism needed a few key ingredients: private property, voluntary exchange, profit motive, and markets that set prices through supply and demand. Fast forward to the late Middle Ages in Europe. Feudalism dominated, lords owned land, peasants worked it. But cracks appeared. Italian city-states like Venice and Florence became powerhouses of commerce in the 12th to 14th centuries. Merchants formed partnerships, used bills of exchange, early credit, and double-entry bookkeeping. Thank you, Luca Pacioli. Banking families like the Medicis funded art, exploration, and wars. This was proto-capitalism, risk-taking, innovation, and reinvested profits. Imagine lending money and charging interest without the church calling it a sin. That shift was huge. The Protestant Reformation, especially Calvinism, later gave moral cover to hard work and wealth accumulation. Max Weber called this the Protestant ethic, turning profit into a sign of divine favor. Controversial? Absolutely, but it fueled the fire. Enter the 17th and 18th centuries. Mercantilism. European powers like Britain, Spain, and France hoarded gold, built colonies, and protected domestic industries with tariffs. It worked until it didn't. Colonies supplied raw materials, but the system was rigid and zero-sum. Then came the Enlightenment and a Scottish genius named Adam Smith. In 1776, he dropped The Wealth of Nations, the Bible of modern economics. Smith argued for the invisible hand. Individuals pursuing self-interest unintentionally benefit society through competition. Division of labor. A pin factory example showed how specialization skyrockets productivity. The agricultural revolution came first. Better farming techniques like crop rotation freed up labor. Then, boom, the Industrial Revolution starting in Britain around 1760. James Watt's improved steam engine, textile mills, coal mines, railways. Factories transformed production. Cotton, iron, steel. Output exploded. Between 1800 and 1900, Britain's GDP per capita roughly tripled. Life expectancy rose, but it wasn't all sunshine. Urban slums, 16-hour workdays, child labor, pollution. Capitalism's dark side emerged. Exploitation went unchecked. Enter critics like Karl Marx and Friedrich Engels. In The Communist Manifesto, 1848, they predicted capitalism's collapse due to falling profits, worker alienation, and boom-bust cycles. They were half right about inequality, but wrong about the inevitable revolution, at least in the West. The 19th century was the Gilded Age in America. Robber barons like Rockefeller, Carnegie, and Vanderbilt built empires in oil, steel, and railroads. Monopolies formed. Standard Oil controlled 90% of refining at one point. Innovation thrived: electricity, telephones, automobiles. But trust crushed competition. Enter antitrust laws. The Sherman Act of 1890 in the U.S. started breaking them up. Capitalism evolved with regulation. The Progressive Era brought labor rights, women's suffrage, and banking reforms. World War I disrupted everything. Post-war, the Roaring Twenties saw stock market booms and consumerism. Then, the 1929 crash. Banks failed. Unemployment hit 25% in the U.S. The Great Depression exposed capitalism's volatility. John Maynard Keynes said markets don't always self-correct quickly. Governments should step in with stimulus and deficit spending. World War II mobilized economies. Post-1945, the Bretton Woods system created the IMF, World Bank, and dollar dominance. The golden age of capitalism, 1950s to 1970s, followed. High growth, rising wages, welfare states in Europe. Mixed economies, capitalism with safety nets, delivered the great compression of inequality. But cracks appeared again. 1970s, stagflation, high inflation, and unemployment killed Keynesian dominance. Milton Friedman and the Chicago School pushed monetarism, control the money supply, deregulate, let markets work. Enter Reagan and Thatcher in the 80s. Tax cuts, privatization, union busting. Neoliberalism was born. Globalization supercharged capitalism. The fall of the Berlin Wall in 1989 and the Soviet Union's collapse in 1991 seemed like capitalism's ultimate victory. Francis Fukuyama called it the end of history. China under Deng Xiaoping opened up in 1978 with socialism with Chinese characteristics, market reforms that lifted hundreds of millions out of poverty. India liberalized in 1991, billions joined the global market. Tech capitalism exploded in the 1990s to 2000s. The internet, smartphones, platforms like Amazon, Google, and Apple created winner-take-most markets. Venture capital, startups, and unicorn companies redefined wealth creation. But inequality soared. The 2008 financial crisis, subprime mortgages, complex derivatives, too big to fail, banks nearly collapsed the system. Bailout saved it, but trust eroded. Occupy Wall Street and populism followed. Today's capitalism faces big questions. Platform capitalism gives us convenience but raises monopoly and privacy concerns. Gig economy offers flexibility but less security. Climate change demands green capitalism, carbon markets, renewable investments, cryptocurrencies, and decentralized finance, DeFi, challenge traditional banking. Behavioral economics, Kahneman, Thaler, reminds us humans aren't always rational. Behavioral biases create bubbles, yet capitalism's adaptability shines. It survived world wars, depressions, and ideological challenges because it harnesses self-interest for collective progress. Look at the data. Since 1800, global GDP per capita has risen over 15-fold. Extreme poverty dropped from 90% to under 10%. Life expectancy doubled. Innovation, vaccines, internet, space travel thrives under competitive incentives. So, is capitalism perfect? No, it generates inequality, externalities like pollution, and short-termism. But its track record of lifting living standards, rewarding creativity, and adapting is unmatched. The future? Stakeholder capitalism, ESG investing, AI-driven productivity, or perhaps new hybrids. What do you think? Is capitalism the hero or the villain of history? Drop your thoughts in the comments. Like if this fired up your economic curiosity, share with a friend who needs to understand the system that built, and sometimes broke, our world. Thanks for joining the Econ Lab. Stay curious, keep questioning, and remember, economies aren't just numbers, they're human stories. See you in the next experiment.